All right, guys. So again, we're starting a new segment. That I want to call it. It's going to be the importance of getting pre-approved.
Yes, absolutely.
So again, Erik Corral, Remax Partners, Chicago Land Broker.
Lewis with Guaranteed Financial, Berwyn.
So here's the deal. I get numerous leads, throughout the day, throughout the week. I mean, some days I get more leads than others. But here's the thing. A lot of times clients come in and they have no idea what step to take to buying a house, okay? So, whether they call me first or they call Lewis first, the number one step you want to take when you're buying a house, it's gonna be to get pre-approved for sure.
Absolutely.
So I mean, there's different things that different factors that are reviewed for you to get formally pre-approved. So we're gonna cover those to make things easy. So as I like to point out, typically the three things that I explain to my clients when I actually share a lead to a loan officer, or what I expect the loan officer to go over, is three things. It's going to be to go over checking means of income. Number two, pulling credit. Number three, it's going to be checking reserves, your savings, your financial savings. And then after all that's reviewed, that's when we really explain to you what your buying power is or what you're pre-approved for. So I'm going to let Lewis go over a little bit more in detail what it takes to get pre-qualified, but I can't stress this enough, how important it is for first-time home buyers to have a consultation, whether it's in person, whether it's a Zoom call, a phone call, but at least have that buyer consultation to get pre-approved. So let's go over some of the things that we want to cover.
Absolutely. So exactly what Erik said, when you're buying a house, what are the steps? How much can I afford? How much money do I need? So on and so forth, right? So in order to get you pre-approved, we're going to look at three things. We're going to look at your income, what your annual income is, whether you're W-2, self-employed, 1099. We want to see what type of income you're reporting and how consistent your income is year after year. The second thing we look at is your credit, right? So we talk about the importance of credit. The higher the credit score, the better the rate is. The lower the credit score, the higher the rate is. So we want to make sure that you have a good understanding as to what your credit score is. And we want to see the financial overview picture of your credit score. We want to look at, any liabilities that you have had open, how long you've had them, any judgments, collections, past foreclosures, bankruptcies, anything like that might affect your pre-approval process.
Let's retract a little bit. All right. So for income, typically about how many years of work tenure do you need to qualify?
That's a good question. So, even if you just started your job last month, right, but you've been working consistently for the past 2 years, we could still do your loan. So we want to see a work history for the last 2 years. Doesn't matter how many jobs you've had in between, but as long as you have consistent work, you're completely fine. If you don't have a 2-year work history, and let's say you graduated college a year ago or 6 months ago, as long as you're working within the field that you went to school in, you're completely fine. But on average, 2-year work history is what we look for.
All right. Another thing I do get is a lot of times buyers are self-employed.
Right.
So I know that's a little bit tricky because I get clients, either truck drivers, even other real estate brokers, you name it, self-employed income. How is self-employed income factored, and what part of the income is utilized to get pre-approved?
So that's a very, very common question. We do work a lot with people that are self-employed. With self-employed income, we need a 2-year income tax return, right? So we're looking at returns for the last 2 years. We're going to focus on not how much money you made. We're going to focus on how much money you reported as net income, right? So with self-employed, you can make $100,000, but if you have $80,000 worth of write-offs, gas, materials, labor, and you're only reporting $20,000 of net income, unfortunately, that's what we're going to base it off of. Because you're self-employed, your income fluctuates. So therefore, we're going to take whatever you reported as net income for year one, net income for year two. We're going to add it up, and then we're going to divide it by 24 months, which equals 2 years. And that's the 2-year average that we're going to use to qualify you for the mortgage.
All right. Just to kind of wrap that up. So for income, what documents do you typically ask for at the time of getting pre-approved?
So if you're a regular W-2 employee working, salary or hourly, just your W-2s for the last 2 years. We don't need to see tax returns. If you're self-employed, we need to see tax returns with all the schedules. If you have somebody that is collecting rental income on investment properties, we need to see tax returns with all schedules. But for the most part, just your W-2s and pay stubs would work.
So most recent pay stubs,
right,
for sure.
Exactly.
Okay. Credit. I know a lot of buyers, they're always hesitant to pull credit. So, I want you to cover a little bit, talk about the misconceptions of getting your credit pulled. What are the things that you look for? Obviously score wise, debt wise and things like that.
A lot of people think that if you pull your credit at least once, your score's going to tank, right? It's not. It's a very, very common misconception. Your credit score has to have multiple inquiries in a short period of time, meaning that many different companies are pulling your credit within a month span, 15, 16, 17 inquiries for it to have a negative impact, right? But what we look for is we want to see how long your credit trade lines have been established. We want to see any negative factors that could potentially affect you in the pre-approval process. And that's going to give us a better outline as to what programs we could offer.
For buyers that are building their credit or just young adults that are starting their credit, how many trade lines do you look for?
It depends on what type of financing we do, right? But ideally, if we go with an FHA loan, which is a little bit more of a relaxed loan, we just need a credit score above 640 for somebody that has very new credit, meaning that you only have one credit card and it's been reporting for 6 months, and that's all you have. As long as you have a score above 640 with FHA for a very thin credit, we could get it done.
So we're going to be covering the requirements of each loan in a different video segment. So for right now, we just want to cover the main 3 things, which is going to be income, credit, and savings. So I think for the most part, like I said, that's one very common misconception is, clients are kind of hesitant to get their credit pulled. Even if you're shopping around different loan officers, I think it doesn't impact you as negative as you might think, whether you're shopping around with a traditional bank or you're maybe shopping around between a mortgage broker that has different loan products to offer you.
And to that point, Eric, when you work with a mortgage broker, we work with multiple banks, right? So let's say we pull your credit today. Whatever bank we work with, whether it's Bank A or Bank B, they're not going to re-pull your credit. They're going to use our credit report that we have on file. So the only way they're going to re-pull your credit is if your credit expires, which is typically about 4 months from the initial pull. So we could shop it around with 14, 15 different banks, and they're going to use our credit report. So you're completely fine.
To clarify that is lenders that you as a mortgage broker are affiliated with, correct?
So these are our end lenders that we work with.
So that does not mean, you go to Lewis, he pulls your credit, and then you go to Chase Bank, he pulls your credit, and then you go to PNC or other financial institutions, correct?
Right, exactly.
Okay.
So one credit pull, we shop it around, and that's it.
So that is one of the advantages of getting pre-approved with the mortgage broker is, there's different loan terms and options that, again, going back to our fiduciary duties, you know, that they're going to look for the best loan that's going to fit you best with interest rates and closing costs. All right. So we, typically we get clients with great work tenure. We get great credit. But a lot of times, savings is a little bit of a problem. So on average, for a loan amount, what amount of reserves does your typical buyer need, or a family that's qualifying together need?
Yeah, that's a great question. So right now, the amount of reserves is going to depend on the type of property you buy, right? So regardless of what your credit score, if you're buying a 3 to 4 unit, one of the requirements is to have the money for the down payment plus at least 3 months reserve of what your mortgage payment's going to be, right? So let's say your mortgage payment's going to be $2,100 per month. Your down payment you need to have that covered. Plus, we need to have at least, what is that? Oh my God, 6,200, 6,300 in the bank account. So depending on the type of property you buy, we need to have at least a 3-month reserve. Other mortgage programs, depending on your credit score, if you have a low credit score, a compensating factor is having money in the bank, right? So your down payment is covered, but we want you to have at least 2 to 3 months reserves. On average, what I tell my clients is having money for the down payment is great, but we want to give the bank an overall financial picture of you having more money as a backup.
Yeah. So basically, I mean, don't set a limit to your reserves. I can't stress this enough how important saving money is for first-time home buyers, you know. So another thing is that I tell buyers is, you know, it doesn't matter whether it's in your checking account, it's in a savings account, even a 401k account.
401k, yeah.
I know a lot of parents will gift the their down payment to their kids, you know, so they can cover their actual down payment. So again,
Absolutely.
I can't stress this enough. Savings is so important. So on average, you want to have minimum, you know, 3 to 5% savings
3 to 5% savings
of the sale price, right?
of the sales price.
And you would say about another 3-month
Reserves. Yeah.
So 3-month reserves, meaning 3 months of what? The mortgage payment?
The mortgage payment. So whatever the mortgage payment looks like, times 3.
All right, perfect. So yeah, there you go. So savings, again, can't stress this enough. So again, for us to determine your buying power, we're going to look at income, we're going to look at credit, and we're going to look at savings. So now that everything is reviewed, what is it that you actually give a buyer? And once you send them over to me as a real estate broker, what should they know?
So when we pre-approve a buyer, I mean, they're walking out of here knowing what they're going to buy. They're going to know what their budget is. They're going to know what the ballpark figure is going to be on the rate, potential closing costs. Everything's going to be outlined for them, right? So when I give a pre-approval out to the realtor, the question the buyer should have is, when can we see properties?
Yes.
'Cause everything else is already answered
Yes,
for you,
yes,
right?
yes.
So yeah, we cover everything from A to B. You know, we educate first-time home buyers a lot because there's a lot of moving pieces. But
Yep.
yeah, it's no doubts is where we want you to have.
And that's one thing that once you're getting pre-approved, you're basically getting educated to buy a house, at least on the financial side of the loan. So that makes my job easier as a real estate broker when, you know, Lewis sends me a pre-approval where the buyer knows what's the down payment they're going to give.
Right.
What's the expected interest rate that they're expected to get at that time. And then not only that, what is the monthly mortgage payment that they're qualified for? And then that's where I come in. You know, once we start looking at homes, you know, these homes are going to have different sale prices, different property taxes, but I can better assist you in giving you a better perspective of what the mortgage payment is on the homes that I'll be showing you. So I can't stress this enough. Get pre-approved before you see any properties, because you're going to be out there like a chicken with no head, not knowing what you're doing.
Yeah, it's definitely something that you know, we do emphasize. We want to show you why, you know, you need reserves. We want to show you why, you know, 2 + 2 = 4. You know what I mean? Don't take our word for it. Let us show you, and that way, you know, you're good.
Yeah, so that's a wrap of our video, importance of getting pre-approved. Again, I'm Erik from Remax. I would be the one that would assist you with the homes. And Lewis here, if you have the pleasure of getting pre-approved with him, he would be the one that would run the pre-approval for you.
I'm the number guy, so, you know, I'll throw the numbers around, make sure you understand them, and get them going.
Share this to your friends and family. Please have them subscribe to my YouTube channel, Erik Properties. We'd love to get you guys pre-approved.
Awesome.